Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns on Nifty, Bank Nifty as well as prices. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned regarding the India VIX, CBOE VIX, Dow Jones, CAC, DAC, FTSE. I mean to say European markets as well as the American markets. Now, looking at that pattern, we felt that the VIX were going to show some sort of weakness, and we might see a sharp technical pullback in the European and the American markets. And we have seen a similar kind of bounce back in the US markets. On the back of that, on our expected lines, our markets also bounced back very sharply. And on Friday, it ended on a slightly weakish note. But throughout the week, the markets were positive, and overall, it seems to be positive in the oversold territory. Now let us go to the charts. We'll try to figure out how the setup is panning out and what could be the trend for the next week. Now this is a Nifty daily charts, and let me draw a parallel channel which we have been mentioning in our last video. This parallel channel has been moving in the last couple of days, and what we have seen that prices had managed to just close above those particular range. You can clearly see it has broken that outer resistance trend line. It has just managed to close above those trend line. Now this indicates that there is some sort of positive trend has emerged from the lower levels. Now this is the daily charts. RSI is also with positive bias. Let us go to the weekly charts. On the weekly charts, you can see that it has formed two hammers. One or first of all, this is the doji. Second is a hammer. Most probably, these are called a combination of bullish pattern. So once Nifty crosses uh, the Friday's high, I mean to say last week's high, which is 17,428, then we might see Nifty testing the levels of 18,100 in the next coming days or weeks. So definitely looking at this pattern, the trend seems to be quite positive. Now let us go to the Dow Jones chart. If we see the Dow Jones chart on Friday, it has given a negative close. It has closed with the loss of 630 points. So if we see this thing now also, it has been moving into a parallel channel. Let me draw that particular channel so we will have a clear view about. Now this is the Dow Jones. It has been moving into this parallel channel. It is in that particular channel. It has faced this resistance, again seen some sort of pullback. So we expect some sort of consolidation at these levels, and sooner rather than later, we feel that even Dow Jones will break this particular upward resistance trend line or a downward falling channel. But the reason for showing this Dow Jones chart was that on Monday, India also Nifty, Bank Nifty might also open with a negative uh, start. We might see Nifty opening with a 100-point gap down, but at the lower levels, we feel that support might be seen maybe around 17,100 mark. So, looking at this particular pattern, we feel the overall trend, you can see this overall trend is still positive. This is just a time correction of this rally, and we will also break and sustain about this particular downward falling channel. Yes, on Monday we might see a gap down opening, but that gap down opening should be used as a buying opportunity. Now let us go to the supports and resistance level of the Nifty for the next week. The first support in the Nifty is placed at 17,216. Second support is placed at 17,117. And third support in the Nifty is placed at 16,942. Whereas on the upside, the first resistance is placed at 17,428. Second resistance is placed at 17,532, and third resistance is placed at 17,744. These are the important supports and resistance levels. Traders are suggested to just follow these levels and try to trade in the direction of the primary trend. And looking at this particular pattern, we feel the strategy should be buy on dips for the next week. Now let us go to the Bank Nifty charts. On the Bank Nifty charts, we will see Bank Nifty has also been moving into a same tandem with the Nifty. It is also moving into a downward falling channel. Let me draw the channel so that we can have a proper view. This is the downward falling channel, Bank Nifty. This is also what we call a time correction or a price correction of this particular rally. Exactly, Bank Nifty also tested upward trend line, and it has given a some sort of cool off on Friday. Even on Thursday, it was some sort of cool off, but on Friday it went down and just tried to just closed about it opening mark. So this is some sort of strength which was Bank Nifty showing us that on Friday, that you will see a 1 minute chart, so we will have a clear view. You can see throughout the day, this is the Friday's chart. Throughout the day, after opening gap down, Bank Nifty remained with negative bias, and in the fag end, it started rallying and ended on a positive note. It was a slightly positive note, but it has ended on a positive note. So, which clearly indicates that at lower levels there has been a strong support coming in Bank Nifty. But as we discussed that on the Dow Jones, we have seen that it has ended with a negative close with the loss of 630 points. Bank Nifty might also open with maybe 250 to 300 points gap down, but that gap down should be used as a buying opportunity in Bank Nifty also. So again, though looking at the charts, the overall trend seems to be positive. Strategy should be buy on dips in Nifty and Bank Nifty. Now let us discuss the supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 38,807. Second support is placed at 38,641. Third support is placed at 38,283. On the upside, I'm sorry. On the upside, the first resistance is at 39,608. Second resistance is placed at 39,865, and third resistance is at 40,073. These are the important supports and resistance level in Bank Nifty. Traders should follow these levels and try to trade in the direction of the trend. So any dips should be used as a buying opportunity in Nifty and Bank Nifty. Now friends, let us go to the third segment of our show, which is option analysis. In option analysis, we'll try to figure out the data of Nifty and Bank Nifty calls and puts. I mean to say open interest, implied volatility, volumes. So let us go to the Nifty calls first. You will see on the screen that Nifty calls, the action was seen in 17,500 calls. Then after a huge gap of 300 points, 200 points, the second action was seen in 17,700 calls and 17,800 calls. Now here you can see there has been rise in the open interest, implied volatility is in comfortable zone. Option premiums are also not that much showing strength or showing that much weakness. It is almost flat to slightly negative. So this means that market might be showing some indication or giving some kind of indication that they might give some sort of consolidation, wait for price to get stabilized, and then maybe next leg of rally on the upside could be seen. because you can see here in option percentage change, you can see there has been a rise in the open interest in each and every calls and puts. So definitely at every strike price there has been an action seen. So maybe the smart money might be waiting for some sort of consolidation for the next week. But looking at this data, there is nothing significant being shown. But looking at to the this particular the concentration of the volume, we feel that 17,500 could be the base. On the downside, we might see some sort of pressure on the markets after Friday's opening. First threshold would be 17,500. If that is broken, and if Nifty sustains about 17,500, then next week we might see 17,800. So threshold would be 17,500 for the next week. Now let us come to the Nifty puts. In Nifty puts, you can see the action was seen in 17,200 puts, 17,000 puts, and 16,800 puts. Now here also you can see rising open interest, rising volumes. The concentration of volume is on 17,200 puts. So 17,200 could act as a very strong support in Nifty. If it breaks and closes below those levels, then there are chances that Nifty might trend down to or slip down to 1700, 17,000 mark. So that is the crucial area or very strong support where Nifty might bounce back. So for the next week, the threshold limit would be, I mean to say, the crucial support would be 17,200. Now here you can see rise in the volumes, rise in open interest, implied volatility is between 17.22 to 18.45. And as I said, there is no significant change in option premium. In calls, in Nifty calls also the same thing. There was no significant change. The closing was slightly flat to negative. Here also, the Nifty in Nifty puts the option the percentage change in the Nifty premium option premium are slightly flat to negative. So we might see that Nifty might initially consolidate in the range of 17,500 and 17,200. Crucial point would be this particular range. If it breaks 17,500, one should go long. If it breaks 17,200, one should go at least be slightly negative for some maybe 200 points. But overall, as I said, the strategy should be buy on dips. Now let us go to Bank Nifty calls. In Bank Nifty calls, you can see the action was seen in 39,500 calls, then 39,800 calls, and 40,000 calls. Now here you can see rise in the there has been rise in the volumes, rise in the open interest, rise in the implied volatility, and there has been a drop in the percentage change of the Bank Nifty calls. Now here, uh, this is because what we have seen that for initial Thursday and Friday, initially market were under pressure, and on Friday, in the last 1.5 hour, we have seen that rally. So might be the smart money might have done some sort of out of the call writing. But looking at this particular data, we feel that if on the upside, if Bank Nifty crosses 39,500, then we might see a sharp short covering from those particular levels. But looking at this data, we feel that on Monday, on the back of the international markets, we might see a gap down opening, but that gap down opening should be used as a buying opportunity. So most probably for on the initially 39,500 would act as a major resistance. If it crosses, then Bank Nifty might test the levels of 40,000 in next week. Now let us go to the Bank Nifty puts. In Bank Nifty puts, the action was seen in 39,000 puts, then 38,800 puts, and directly to 38,000 puts. Now here in between you can see there has been rise in the volumes, rise in the open interest, but this particular rise in the open interest was not as compared to 38,000, 38,800, 39,000. Slightly rise in the open interest. Implied volatility is shooting up. It is between 22 to 24.25. It is already in the danger zone. Here, surprisingly, what I see that the drop in the Nifty puts are not that much strong. So, I feel that if there is a gap down in Bank Nifty on Monday, smart money might come in aggressively and start writing puts. When smart money starts writing puts, we might see a sharp rally coming into the markets in the next week. So definitely looking at this particular overall data of charts in Nifty, Bank Nifty, overall data of option in Nifty and Bank Nifty calls and puts, we feel that strategy should be buy on dips for the next week. On Monday, after a gap up opening, one should start creating long positions at least for next week. So the overall trend of the markets remains to be positive. Now let us come to the final segment of our show, which is positional call. I have identified one stock from paint industry. The name of the stock is Berger Paint. The stock has been beaten down significantly from its high, and looking at particular setup, we feel that the stock has potential to rally from this particular level. So long-term investors can accumulate the stock in the range. Let me go to the chart. This is Berger Paint. You can see when prices were making some sort of lower tops, RSI was making higher tops, which is a classical example of a positive divergence. Now let me put a parallel channel so that we may we might get a target for long term from these levels. Now here you can see the stock has been moving into this particular channel. The, the nature of the stock is highly volatile. It has taken a support. You can see the volumes coming in after taking a support. RSI is also with positive bias. One should not forget that festive season has already started. Crude is cooling down. Yes, definitely in the recent times, the crude has rallied or bounced back maybe $4-5 from, but it has corrected significantly from its recent 52-week high. And the data suggests that during festive season, uh, there are demands for the paints industry. So you can see the setup is quite positive. Currently, the stock is quoting around 625. The potential of the stock is maybe 720 to 740 in the next long run, maybe next 10 to 12 months. So long-term investors, positional traders, positional investors can accumulate the stock on dips to 615 for an upside target of 720 for long term. Even for swing traders, the stock has potential to test the levels of 665 in next maybe 2 or 3 months. So definitely long term investors can accumulate the stock on dips to 615 for an upside target of 715 to 710 for long term. So definitely the price volume action is showing that this stock should be in the portfolio, and this stock has always given good returns in long run. So definitely one should buy this stock and hold it for at least long term, and even it is good for the swing traders those who want to trade for maybe next 5 to 6% from these particular levels. So thank you friends for watching the show. Any comments you can give into the suggestion box, or any suggestion you can give into the comment box. Uh, and have a nice trading week. Thank you very much.